Hi everyone. I thought if I recorded a short video with some explanations, it might help you out in doing your Connect homework from Module 2. And we'll be using the same type of material in Module 3 as well. So this is the heaviest portion of the homework assignments from Connect. What you have here in the third question are a series of transactions that happened in your not-for-profit, and you're taking it through the whole year and eventually closing out all of the accounts. So the process is the same as what you've done before, but some of the accounts and the way that we have to handle things are a little different. So 1 through 7 should be pretty straightforward. Just keep in mind that you are going to separate anything that is with restrictions from anything that is without restrictions. So you'll have a contributions with donor restrictions and a contributions without donor restrictions accounts to choose from. When you get down to number 8, you're essentially doing an allowance for uncollectible accounts, allowance for uncollectible pledges here. But the account that the author uses as the equivalent of bad debts is a little bit different. It's a provision for uncollectible pledges, so you might want to note that one. It's going to get folded into the expenses and ultimately closed out. Typically bad debts expense is a title that's used there and that you're probably more familiar with. So after you do 1 through 8, in number 9, you're going to take these functional expenses and you're going to put them into the buckets that are common in not-for-profits, program services, and you've got 2 programs here. Then you'll have management in general, and then you have fundraising, and you've got the percentages listed here. So it might be helpful to sketch out some quick T accounts to make sure that you capture everything from up above, or just look through the transactions, print them out, or scroll through them and make sure that you capture all of the expenses before you begin to do this allocation. So you're going to zero out the expenses the way the author has you do it here, the individual accounts like telephone expense, and you're going to move those expenses into these categories listed in number 9. Then you do have some net assets that were released from restriction. So they're telling you that the state grant that came in up above, the requirements were satisfied. So now they're going to move those resources from restricted to unrestricted. And I'll show you a couple pages in the text. You actually have to move them to different accounts through a journal entry. And then the last one is to close all the nominal accounts. So you're going to close the revenue and expense accounts. And then these net assets released from restriction accounts, you're also going to have to zero those out and put them into the appropriate net asset accounts with donor restrictions or without donor restrictions. So the closing process is a little bit more involved. Instead of closing out revenues and expenses to retained earnings, you've got a couple of other choices that you can use. There's a transaction guide in Module 2 resources. So if you didn't download that, go back and do so that you've got those transactions to reference. And then let me go over here to the textbook, right? And I'm gonna have a little bit of a problem putting it all on one page, but hopefully I can show you the pieces that you might want to pay attention to. So the table of contents in your text, I'm in here in the accounting for not-for-profit organizations. It has a page 39 start in the table of contents, and I'm on page 60. They go by the green numbers here, since this is pieces from a much longer textbook. So the textbook page is 578, but in our resources, it's page 60. So this actually takes you through over the course of several pages. A lot of different transactions. Not every transaction is going to be in that problem, but a lot of them are. I'm just going to scroll through a couple of these pages here to get to something that I want to point out as some good transactions to look at. Okay. So the end of the year adjusting entries, we don't have too many of those in the problem, but here's one, number 19. That's the entry I was mentioning before about the provision for uncollectible pledges. This debit of 104 here is actually an expense account. And then down here we have some examples of net assets released from restrictions. In here you have some classification entries, okay, to look at where they are putting the functional expenses into the buckets for programs and management in general and fundraising, and taking them out of their other classification. Right? And then number 24 here takes you through some of the entries that you would need when you're releasing assets from restriction. Right? So those are the places that I would suggest that you look for some help. And then here's the closing entry examples here on page 66. So roughly pages 60 to 66 should be helpful in doing that problem. I hope this has helped you out. If you have any questions, don't hesitate to reach out through email. And if we can handle it through email, fine. If not, we can always have a conversation. So good luck. This chapter 3 is probably the longest and most challenging of the Connect assignments. And chapter 4, we're going to put them into financial statements. So I'll talk a little bit more about that and shoot you another quick video for that homework.